Hey everyone, welcome back to the channel. Today, interesting company, Foot Locker, we'll be looking at. Pretty interesting. If you look at their stock in the last year, a couple of years, actually, it's down like 50%. But they've actually had a pretty good year in 2021. So it's a bit of an interesting thing. From a fundamental valuation standpoint, if you kind of don't do all the research and kind of plug in actually really low growth of like 2 to 3%, you get a crazy valuation saying they're very undervalued. But if you kind of think about some of the bigger aspects that are impacting the business and look at those, you can kind of see, maybe it's actually a little bit more fairly valued, but maybe potentially still a little undervalued. Let me hop on over into my spreadsheet, and I got some notes first, and then we'll go ahead and take a look at that DCF. So here's some notes I recorded of their most recent earnings call. And, I think a few things to note is Foot Locker is going through a transformation right now. So first thing on the merchandise side, historically they've sold shoes. They're now shifting to actually focus on apparel as well. And they're introducing new third-party brands and even their own private label brand. So why this is important, we'll get to a little bit later. But this is to kind of try to supplement some of the revenue streams that are going away. And some of these things, I think they said the apparel was growing 30% year over year, represents about $1.4 billion of sales annually. So this is definitely growing really well and very strong for them. A few other things to note here. Outside of the US, they just launched a new e-commerce platform. They're increasing their dropship program. I don't know how I feel about this as a consumer. I kind of hate like the Walmart and the Target where you're like searching for an item and then there's like a million vendors selling it and then you don't know who it's actually coming from. So I think that this could actually cause a little bit more confusion, but I understand that allows you to offer more products on your website. I don't know how I feel about this as a consumer, but maybe others feel differently. They're also shifting out of the mall. They're moving to these bigger box stores, a completely different format. They launched 50 of them. They did pretty well. They have plans to launch 300 more. We'll see how that goes, but seems to be like a better format for this kind of apparel / shoe store. Interesting, they're opening what they're calling a home field store, and it's a large one-stop shop across sports lifestyles. Sounds a lot like a Dick's Sporting Goods or a Sports Authority style store. So interesting that they're just trying to move into more of the apparel, or I guess sports retailer. So interesting to see how that pans out. I think that store launches in 2022 sometime in Florida. So we'll see. Outside of Nike, they have really strong growth at about 30%. Which sounds impressive, but we'll kind of touch on this here in a second. Nike makes up 70% of their sales, so that's kind of the adjustment there per se. Apparel growth, growing really strong, as I mentioned a little bit earlier, 30% in the fourth quarter alone, and reaching $1.4 billion of sales annually. A couple other interesting things on the M&A front. They acquired WSS and Atmos. So WSS gives them a really strong off-mall presence, and it's targeted at the Hispanic community. So they're trying to diversify their revenue streams. Atmos is a provider in Japan, so this gives them kind of a good foothold in Japan and a launching pad for the rest of Asia. So they're definitely, trying to grow by acquisition and build some other revenue streams outside of their core Foot Locker stores. Now, some of the biggest risks here, their largest vendor, Nike, it says makes up 55% of sales. That's actually where it's going to be by 2022, I think is what they said. It actually made up 70% of sales this year. And the risk here is Nike's actually accelerating its direct-to-consumer strategy. So Foot Locker is expecting Nike sales to continue to drop pretty significantly. So I think that's what's really been priced into the price of the company and the decrease in valuation there. Another couple things to note, they had a really strong 2021. They even mention it is based off stimulus checks, right? Everyone got $1,200. Why not go buy a new pair of shoes for $100? That's obviously not going to repeat in the future. And then the other thing is, if we think about it, is a lot of the growth this year was actually driven by acquisitions through WSS and Atmos. I think they said WSS is on pace to do $1 billion in sales in the next 3 years. So, we could probably assume it's probably 300 to 500 million of sales between WSS and Atmos. So if you back that out, right, their growth really isn't as strong as it was. But let me go ahead and hop on over to the DCF and we'll talk through some numbers here. So what I've done here, it's, pretty simple revenue, just one line COGS, gross profit, SG&A, right? So kind of the whole thing here. And you can see the historical growth, right? 17 didn't grow, low single digit growth, drop in 2020, and then huge growth in 2021. I think this is a mix of things. It's a launch of the apparel, the private brand, the stimulus checks, right? So I think that drove a lot of that high level growth there. Um, Something else to note here now is they give us the percentage of Nike sales and how it's kind of trending. So they said it was 75% of total sales in 2020, 70% in 2021. Then they expect it to be 60% in 2022. So from here, we can back out how much of their total sales are Nike, which is a little alarming, right? 6.2 of their 9 billion is Nike. And if Nike is planning to no longer sell through Foot Locker, right, then this is 3 billion in revenue. So what I've done here is to kind of highlight this is I've said, what's the percentage of sales that'll be made up by Nike? And I've continued to assume a sharp decrease in sales from Nike until it gets down to about, 7-5%, and then it'll stay at about 5%. My thought here is Nike will always sell some through traditional retailers. They don't want to completely cut that off. They know that that's a market that consumers will shop through, but it's not going to be their primary push anymore. You might get just a smaller selection of shoes there. So from here, we can see the Nike sales, and then we can back out the remainder based off our assumptions above. So I've assumed they've given us guidance that there's going to be 4% sales decrease in 2022. So I've actually taken a pretty conservative approach and said sales are going to continue to decrease, and that's going to be driven by the Nike. So we're seeing about $1 billion lost in sales from Nike every year until it gets down to about $300 million, and then we just level it off, right? So the other piece here now is the other sales, and we can look at how that's growing. So we see pretty strong growth, right? This year, 42%, 28%, 20%, 15, 12, right? And we see it kind of decreasing down until it kind of normalizes out there. So I guess my thought here, what all this means is with this, I think this is pretty conservative assumptions. COGS we have at kind of above historical averages or around historical averages. SG&A, they have some cost saving measures, so just a slight improvement there. Tax rate, we can ignore that. That's just a base assumption we always make. But we can see with these assumptions, we get about a $5.2 billion valuation, which is actually pretty good considering the current market cap is about $3 billion. And this is using a 12% whack. So if we use, even if you throw a 14% whack on here, you're saying like this is pretty risky for them to actually transition to a new business model, not including Nike, right? We still get a $4 billion valuation. So, I feel pretty certain that, this is a pretty undervalued company that the markets may have overreacted to. But I guess we'll kind of see how the consumer trends continue. Will people go back to malls, go back to stores to buy shoes? I think 2022 will really be the proving ground here. Do they really end the year at a 4% decrease, or is it much more significant than that? I think that'll be kind of the interesting thing to watch here. But I think if you believe in retail in the long term and that people will still be going to the store, then I think Foot Locker should be able to transition pretty well, right? They got New Balance, Puma, Crocs, all these other great companies that they can sell the shoes through. So I think there's still a market there, right? If you can pick up like Allbirds, some of these other direct-to-consumers and just start, really diversify your vendor mix a little bit more, then things could actually look pretty good for them. And they could sell a lot of different shoes and still make a decent profit there. So anyways, with my model, I get about a $53 per share price compared to the $31 it's currently trading at. These numbers are as of yesterday, so March 2nd. So it might have changed slightly overnight. I didn't look at it this morning. But overall, I think it's a pretty compelling case and something, maybe to definitely look a little bit more into. So anyways, I hope you found this useful or interesting. If you have any questions or comments, please leave them below. And always feel free to download this model, adjust any of my assumptions, and see what kind of valuation you get yourself. Thanks so much.